I asked you guys what the next video should be about, and you voted for Realty Income, so here we are. Realty Income stock, ticker symbol O, the famous monthly dividend paying stock. This stock is down 22% year to date, and roughly 2 weeks ago I uploaded a video explaining why I am still bullish on the company. And to be clear from the beginning, I still am. Most recently, the Fed did some announcements that could impact realty income and the whole REIT sector in general. Most people love realty income stock because of the monthly dividend, and I understand why with dividend yield at 6.11%. On top of that, they increased the dividends for 25 years in a row. They also did increase the dividend a tiny bit recently, which is very nice. And with the stock coming down and being a very popular dividend stock, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Realty Income do? Realty Income is a REIT focusing on freestanding single-tenant triple net leased retail properties. Its properties are located in 50 states and Puerto Rico and are leased to 1,300 clients from 85 industries. And if we dive in the recent earnings report, we see that total revenue was reported at 1 billion versus 810 million in 2022, so that's a decent increase there. Net income per share decreased quite a bit, which worries me. The FFO is still pretty steady and in line with previous year's numbers. Realty Income did also revisit their 2023 full-year guidance with lower net income per share range. AFFO is still pretty much in line with previous numbers and occupancy rate also looks good to me. Acquisition volume is increasing a bit, which is also very nice. Realty Income has 54 years of operating history, so they know their game. More than 13,000 commercial properties in their portfolio and A credit ratings, which is also very nice. In total there are 1,300 clients within the portfolio and they are active within 85 industries. 76% of the total revenue is coming from collecting rent from retail companies. They claim that 91% of total rent is resilient to economic downturns or isolated from e-commerce pressures. 15% of the revenue is coming from non-retail companies. Right now, Realty Income is the 4th largest REIT in the world, which is also a decent amount of investment in Europe. In here we see the top 20 clients. Dollar General is the biggest client with 3.8%, so I do like this diversification a lot. Next to that, we see some other big names in here as well. Roughly 11% of the revenue is coming from convenience stores and almost 10% is coming from grocery stores. Dollar stores represent 7%. The weighted average lease term is sitting at 9.6 years, which is not that high of a number, but it's fine by me. Roughly 49% of the leases expires after 2032. Another important metric is the net debt to EBITDA. I prefer this number to be in a range of 5.5 to 6.5. Realty Income is sitting at 5.3, so there's a little more room to expand here. And if we take a look at the acquisition volume, we see that Realty Income is really increasing here, with more acquisitions. This is something that I really like, expanding the business. And now that we know more about this company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Realty Income is a 33 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 12.2, indicating they might be undervalued. Later in this video I will show you my 3 price targets for Realty Income stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 3.69 billion, and in this graph we see that revenue went up in the long run. The recent increases also happened due to acquisitions. We see that margins are going up and down quite a lot, and in the long run we see a downtrend, which is something that I don't like. EPS is going up in the long run. It is not really steady and consistent, but that's very common for a REIT. Analysts expect 2023 to be a tough year in terms of EPS growth. After that, it is expected to see mid-single digit growth in EPS. For the revenue, it is a pretty different number, with double-digit growth expectations. Return on assets is sitting at 3.2%, which is a low number, even for a REIT. Return on equity looks also a bit on the low side, and the most important number, return on invested capital, is sitting at 1.8%, which is again a low number. And it is slightly lower than the 5-year average, so that is also something that I don't like. Current ratio is at 1.5, which is a great number for a REIT. Nothing special to mention here. Right now, Realty Income has 20 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. Realty Income has 268 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.11%, which is a great number. Annual payout is a little bit over $3 and payout ratio is at 74%, which is around the average for REITs. And keep in mind that Realty Income pays a monthly dividend instead of a quarterly dividend. The 5-year growth rate is at 3.7%, which is pretty decent, and they have increased the dividends for 25 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that Realty Income did increase the dividends at a decent rate. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow steady on from here. Overall these dividends look pretty interesting to me, but how about the historical returns? I decided to compare Realty Income stock with the overall market, in this case the S&P 500. Next to that I added NNN, FRT and SPG. On the 5-year chart we see that Realty Income underperformed the S&P 500 big time with only 13% return including dividends. The S&P 500 did beat all stocks in this list by a significant amount. On the 1-year chart it looks pretty similar with the S&P 500 beating these stocks again, except for SPG. Realty Income is having a minus 12% return including dividends. On the 6-month chart it is the S&P 500 together with SPG with the highest return again, 8% in total. Realty Income is at minus 16%. On the 1-month chart it is again the S&P 500 with the highest return, but all are at a negative number, which is very interesting. Realty Income has the lowest return. So bottom line, Realty Income underperformed the S&P 500 short term and long term. But with the stock hammered down quite a lot, it could be an interesting buying opportunity. So could this be the perfect time to buy Realty Income stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 7, 10 and 12%. Based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 20, 21 and 22%. And for the free cash flow margin I'm putting in 70, 71 and 72%. For the PE ratio I'm putting in 20 and for the price of free cash flow I'm putting in 15, 16 and 17. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now, Realty Income stock is at $49. I hit analyze and we see a lot of green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $52, which is right above the current stock price. We have a mid-price target of roughly $68 and we have a high price target of roughly $82. To me, the mid-price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion on this stock is that they are hammered down a lot recently. And yes, the company is sitting at a 52-week low and there are some interesting situations with the rates. But in general, it is looking pretty good for Realty Income. Most fundamentals look good and they pay a solid dividend. And to be honest, it feels like a great buying opportunity, since in my opinion we are seeing a bit of an overreaction right now. So I'm still bullish on the company and I'm planning to add more shares anytime soon. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.